Hello, check 1 2. Hello, mic check. Hello. Hello, 1 2. Check, mic check. Hello, check. Hello.
Hello, I am Sankarsh, the founder of Savart. Savart is today India's
Good evening, ladies and gentlemen. Good evening. Good evening. Thank you very much. So, thank you very much for joining here, respected media people, all the guests, partners, colleagues, friends, and family of Savart. It's wonderful to welcome you all for this amazing evening. It's a celebration for us. I hope you guys also have equal fun and equal excitement as we guys are having right now. So, we are Savart, and by the way, my name is Karthik, and I'll be the host for the evening. We are Savart. So Savart started as a small dream back in 2019, officially started in 2019 with a dream of getting India invested. That's a small dream that one individual had. And today we are 2,100 crore asset under advice company. That's a great achievement in the 4 years. And not just that, much more exciting thing is that the launch of an amazing portfolio management service, the Ad Astra Fund, for which we are gathered here. And let me tell you one thing about Ad Astra Fund before we move forward. It's the world's only fully automated fund. That's a great achievement. So you might ask, 2019 you guys had a dream, and right now you are saying you have 2,100 crores of asset under advice and you're launching a new service as well. How did this happen? Where did it all start? Was the entire journey easy? There are many questions, right? So to answer all those questions, there is a small AV that we would like you to have a look at, and that will answer most of your questions, I'm sure of it. So can you have the AV, please?
Hello, I am Sankarsh, the founder of Savart. Savart is today India's largest investment advisor, but how it went on to become the market leader and the entire journey is what makes it more interesting than this pole position that we have today. I'll take you through this journey in the span of next few minutes. The idea of Savart started when I was 14 years old and I came across a book called The Intelligent Investor. And that book introduced me to the world of investing. 2 years later, and after reading through hundreds of books and starting my own personal investment, I published my book called Financial Nirvana, which was just a collection of all my personal investing experiences. The book received far greater response than I had expected. A lot of people who read through the book came back and told me, why don't you help me manage my capital? This was a great idea for me because I was always short of capital and had dozens of ideas to invest in. This was a nice, easy way to make some money. But there was one more problem. It was that I was not even 18 and was not licensed to give investment advice. So that's when I started freelancing on sites where I was selling my investment strategies to these clients and made some quick bucks. That is how the idea of Savart was born. 2 years later, I met my mentor Ajay Batra, who also became my first investor. He told me, before you even start Savart or any asset management firm, why don't you go on the ground and talk to people? That was an eye-opener. I conducted a survey of 2,000 to 3,000 people across the country, ranging from daily wage laborers to billionaires, and tried to understand what their behavior with money was. And I got insights that completely changed my perspective towards what I envisioned Savart to be. I understood that Savart needs to reflect the ideals and the needs of India's masses. Their problem was not just having a great technology or an app or a great user experience to invest into stock market. Most of them did not even know what is stock market. So it had to start with something really basic. And that's what we began working on. I was soon joined by Sridhar and Aditya, who along with Ajay became my mentors as well. They helped me build the investment philosophy, the research framework, and help set up the entire infrastructure that Savart was going to thrive on in the future. And a year later is when we received our license from SEBI for registered investment advisor. It took us literally 13 months to get there because to begin with, my age was a problem and it was not easy to fathom even for the regulator to understand whether I was really the director who was running the company. But that was an interesting and a very great learning experience that we had. And within a span of the next 5 to 6 months, we got a really large amount of attention from news and media agencies across the country. And it propelled us to 100 crores in assets under advice in no time. And these initial wins and successes gave us a lot more confidence. In September 2019, Savart launched its first version of the web and mobile application. Along with that, it also marked the beginning of the Apart AI system, and this was a game changer. We had a belief that AI and automation would transform research and fundamental analysis in the long term. The reason why we believed it, because we thought it's a low cost and affordable and a scalable solution to take investing to the masses and to also eliminate human bias and emotions, increase the research coverage and create a global asset management company. And it has benefited us since then. The next important step for Savart was to expand internationally, not just in terms of physical locations, but also covering new markets for helping Indian investors invest globally. So we added American and Canadian markets to our research coverage. We also worked with multiple international partners to ensure that the investment experience really became seamless for all of our clients. It was only a matter of time before Apart. Hello, I am Sankarsh, the founder of Savart. Not just in terms of physical locations, but also covering new markets for helping Indian investors invest globally. So we added American and Canadian markets to our research coverage. We also worked with multiple international partners to ensure that the investment experience really became seamless for all of our clients. It was only a matter of time before Apart went through a really testing phase. On 2nd January 2020, the system gave us a call to move 65 to 75% of the entire client's assets into liquid funds. We were really intrigued. Why was our AI telling us to move such a huge quantum of funds into liquid fund? It was until 2 or 3 months later we never understood that the reason for this was an impending crash due to COVID. And during this maneuver where we moved our money from active securities and investments that we had made to liquid funds and then back into the active stock market or reinvestment within the next 2-3 months saved us between 600 to 800 crores of client money. And this became the turning point for the performance of Savart's portfolios as well. In 2021, we were joined by BNext, our first institutional investor, who also went on to reinvest in our company a year later. This showed their confidence in the growth potential of our company and their belief in our vision to be the world's largest asset management company. And a year later, in the early days of 2022, we launched the P3 version, the third version of the Savart web and mobile application. This was exponentially better than the first version that we had launched and was built on the feedback given by our clients and investors across the globe. This reflected the new age investment experience that was demanded by the young investors of India. The next important step was to move to a nice, swanky looking office, and that came in the form of our high-tech city office, which became our new headquarters in June 2022. Over the next few months, we made a significant change in our policy and pricing plans. We moved from a single subscription of a 1-year plan to a 3-year plan model, which also reflected our long-term belief and aligning with the joined by some of the most reputed investors in India. This was an immense validation of the Savart business model. In early 2023, we started opening Savart franchisees across India. What started with a single franchisee has now grown to 13 franchisees across 4 different states in India, and we have a plan to open at least 100 franchisees over the next 2 to 3 years. These franchisees and these physical locations help us have a better interface with our clients, help them build the much needed trust during those initial conversations. Over the next few weeks, Savart also launched the Nirvana program. This was a very initial dream of educating the masses about investing, personal finance, and one of the foundations of why Savart was built. Though it took a long time to actually get started with this idea, we were finally relieved we actually got it done. So Nirvana is all about helping people understand what investing is from the basics to an advanced level. So even those who do not want to actually invest with Savart, Nirvana program wants to empower them to make their own investment decisions, but in a much more smarter and wiser fashion, based on fundamental analysis and thorough research, rather than on tips and grapevine conversations. In addition to the Nirvana program, Savart also started working on its personal finance services. Now, personal finance is not lending or anything that comes to your mind immediately when I say finance. It is all about understanding wherever money is involved in your life, from assets, liabilities, debt, expenditure, insurance, tax, inheritance. Wherever there's money involved in your life, we want to help you optimize that. Now, this was also a service that was started after clients' feedback. So a lot of clients used to come back and ask us, what is the amount that we need to invest in the stock market? Now, this seems like a simple question, but we would not be able to answer that until we understand their entire financial world and behavior. So this is what the personal finance services get to, which is focused not just on investing, but everything about money. Now, while all of this sounds like a lot of progress, we believe we are just getting started. From a small dream to being the world's largest asset management company, this is going to be a wonderful journey, and we invite all of you to join us in making this happen.
One thing, we don't believe that we are just launching a new service here. We believe we are opening doors for complete new financial options which cater to your individual aspirations and dreams, etc. So that's what we believe in. So before we move forward, I would like to mark this auspicious beginning with lamp lighting ceremony, traditional lamp lighting ceremony. And for that, first I would like to invite our CEO, Sankash Chanda, onto the stage, please. While he comes on stage, I have to say one more thing. Our journey finds purpose in our customers. Without customers who believe us with their hard-earned money, life goals, etc., we are nothing. We are incomplete. So we have few of our advisory service customers with us, and we have just picked out 4 names to join Sankash on stage for lamp lighting ceremony. I'll just read out their names. If you can just join Sankash on stage, that'll be really helpful. Mr. Uma Shankar. Mr. Uma Shankar, can you please join us on stage? Mr. Srinivas Motku. Mr. Srinivas Motku. Ms. Padma Trivikram. Mrs. Padma Trivikram Garu. Jay Krishna Garu. Jay Krishna Garu. We'll be doing a lamp lighting ceremony. Just a second.
Advisor license allows us to give advice to clients on stocks, mutual funds, bonds and gold, but then the investment execution always is done by the client. It is at the discretion of the client. So there's an entire consent that is required. So there's small issues that this entire process creates, which we'll also discuss a few minutes later. but I'll just explain the difference to begin with. So as an investment advisor, we can only advise you. To give you an analogy, when you go to a doctor and you have a certain issue with your health, the doctor can only give you an advice and a prescription, but then it is your prerogative to actually go and get it, say, do the medical tests or get the medicines purchased. That is your prerogative. Now what changes when we move to asset management is we have a fund very similar to a mutual fund where we are able to collect funds and also manage, so led by a PMS. The second issue is in terms of more aggressive investment philosophy. So we got a lot of requests saying, why don't you give us penny stock, why don't you give us micro cap stock, why don't you invest in smaller companies that are also making money. We never actually had a mandate that we will reject them from our investment philosophy. But the problem is, currently we are now at a scale that we cannot invest in small companies which are illiquid. A company with a market cap of 200, 250 crores of market cap and a free float of 1.5, 2 crores, it's very difficult for Savart to recommend that stock, because Savart's own clients will end up investing 20, 30, 40 CR into that, and we'll ourselves move the price. So from the time the first client invests and the last client of Savart invests, the price has already moved up by 20, 40 or even 50% basically, depending on the liquidity. So here in the PMS, while that entire illiquidity problem may not be immediately solved, we will at least have the opportunity to make more aggressive investment decisions. When we know that a client is investing 50 lakh rupees with us, which is a minimum that SEBI has stipulated, we do understand their risk appetite and all their financial requirements. So that is another benefit that a PMS provides. Now all this translates to higher probability of a return. Now if you would say, Pankaj, would you be able to guarantee a return in PMS that's better than advisory, or would you be able to guarantee an X% return? Absolutely not. You know that we are transparent and ethical in our entire communication. You will never hear from us promises, guarantees, or assumptions that are extremely forward looking, because we believe that numbers speak louder than simple words. And if you have seen our performance, most of you have been our investors already, so you know what we are capable of and what's the returns that we have provided. The last point is in terms of the 50 lakh rupee requirement. Immediately whenever we were talking to clients, we got a lot of things saying, Sankarsh, you said you'll keep the investment landscape inclusive, you were talking about being democratic, letting everybody invest. Then why is this requirement of 50 lakh? It's a steep requirement, we also understand. But please understand that this is a threshold that the regulator SEBI has mandated us. This is not a requirement that Savart has put up for the Ad Astra Fund. Any PMS service or a fund that's launched in India has the same minimum capital requirement, because the regulator's idea is that this is the minimum level that has to be maintained to ensure that only the clients with the right risk appetite, the high risk appetite or aggressive investors, are able to invest into this program. So now, what PMS are we talking about? The Ad Astra Fund. Firstly, we'll digress a little bit from the technical parameters, and you might be interested what is the Ad Astra basically. So Ad Astra in Latin means to the stars. Now anybody who's with me at Savart also knows that I'm really obsessed with the cosmology and space sciences basically. So this is where we took the inspiration from. Why people talk about moonshot, right? So we recently already achieved that as well. We have already achieved the moonshot. So we thought, what's the next frontier, right? So for the human race. So that is the stars. And what better way to put it in terms of a fund's name, where our ambitions also rise to the stars, and we want to give a stellar experience to all of you guys. So that is what Ad Astra means. And second reason why we also chose space sciences as a theme. So if you notice, the entire creatives, the color palette, the backgrounds, everything resonates with space sciences and the universe here. Why is that so? Number one, it is not just that just because I'm interested in stocks and space sciences, I started overfitting or force fitting these two subjects together, which could also be true, but my own bias. But the most important thing is we draw a lot of parallels in how the universe works and how the stock markets work. Number one example that I always keep taking is the idea of entropy, right? So moving from randomness or chaos into order. If you look at the stock market or the price graph of any particular security on a minute, second, daily, hourly or a weekly basis, you will see a lot of ups and downs and a lot of volatility. The same stock, if you are able to see in the long term, a 5-year chart, a 10-year chart, or a 15-year chart of a stock price, it is very, very smooth and converges with the fundamentals of the business, whether it is the revenue or the profits. So the volatility just ceases to be, and that is the beauty. So from chaos when order arises, from divergence when convergence emerges, right? So the market automatically, almost by magic, creates meaning in the long term. It aligns with fundamentals, however volatile and inexplicable it might look in the short term. So that is my most favorite part to look at this. And in the brochures that we have given you, sorry, my PPT. Also we'll understand going a little forward. Yeah. Oh, there, okay. Yeah. So in terms of the investment philosophy of the Ad Astra Fund, so what are we going to actually invest in, and what is the strategy that we are looking at? Number one, as mentioned, this is an aggressive investment strategy, which means we'll be extremely focused on equities as a part of the portfolio. Second, it is long-term focused like all of our investment products. When I say long-term, Savart defines long-term as a minimum time horizon of 3 to 5 years, and 7 years being the optimal time. Now a lot of investors would not, and the investment processes have all been detailed in extreme meticulously in the disclosure document. So the disclosure document investment, we want to bet big on that, which means the number of securities or holdings in your portfolio is not going to exceed 10, 12, 13 with this investment. Next, in terms of the stellar core apart, what does that mean? How does this entire thing work? And Karthik also mentioned during his presentation, this is the only fund that is the world's only automated fund, and we have talked about AI, we have talked about a lot of jargon there, and this is where we'll get into all those details. And I'll also ensure I don't tread into the territory of my colleague Surut, who will also add a lot of details into this entire apart system. I'll give you a brief detail and then he'll build up on this entire idea. First of all, what is APART? APART stands for the Advanced Process Automation and Research Technology. Now this is an entire very fashionable jargon that we have given just to look good and marketable. All you have to understand in this is that it's an artificial intelligence driven system which helps us automate the entire research operations. Now I'll also give you a disclaimer that because the market is currently hot about AI, Sankarsh is going to add the word AI a lot of times into this pitch so that there's a lot of buzz in the market. Just to give you an idea, we have started this in September 2019. So the very basic version of the APART system started 4 years back. So this is not an idea that came just 2 months back. Let's make a brochure about APART and get started. So all the investments that all of you guys were making through Savart is also powered by the same system. And if any of you drop by at our office, you will be very thrilled and also stunned to see no fund manager or not many research analysts sitting in the company. So there is nobody sitting and making investment decisions. So there was also this misconception when there was a lot of PR about the company that Sankarsh is sitting and doing stock advice from the back end of the application. So I do not have that kind of ability to give the 25% CAGR return that Savart has provided. My own portfolio has underperformed Savart for a very long time, and I am not involved in the stock recommendation process. So this is all about APART. So this is, we'll get into a few more details of why this research engine is so important. Broadly, this research engine has 3 core systems or engines beneath it: Quant, Iris and Synapse. We'll go in the same order. So quant system is all about quantitative, numerical or mathematical or objective data about a particular investment or a security or a business. What is numerical data about a business? P&L, the profit and loss statement, the balance sheet, the cash flows, market shares, directors remuneration and so on. Any data about a business that can be put in a mathematical format is understood by quant. Now across the world, especially in the developed markets, there are already a lot of quant-based hedge funds and a lot of quant-based investment funds available. But the problem with them is they start with mathematics and also end at mathematics. And many of them fail to attract a lot of investor attention, nor even able to beat their benchmark. Of course, there are outliers and there are some of the best performing as well, but they are quite a few and they are outliers. That is what it is. So we don't just stop at mathematical or numerical analysis. We move to iris, which is what makes APART truly different and remarkable. APART looks, the iris part of APART looks at qualitative, subjective and abstract information. Things like moat, corporate governance, brand quality, stakeholder relations, employee satisfaction, civil and criminal litigation against the promoters and management, ethics of the promoters, and the promises they have made to investors. So anything that cannot be put in numbers is analyzed by iris. So where is this data coming from for quant and iris? From annual reports, con call transcripts, the social media posts, news articles, journals regarding the industry and multiple industry data points that are released frequently. Any data point that is pertaining or relevant to business or investment we are making, it is interpreted, collected and decided upon by APART in real time. And we'll also get into a few interesting statistics on how big that system is. The last system is Synapse. Now quant and iris might do a lot of research, but it doesn't matter if it doesn't align with the client's requirements and expectation. I'll give you a small idea. A client, say, has invested into a stock that APART has recommended, which is a two-wheeler stock. I'll not name it, just for an example I'm giving you that. And the stock did not move for the first 2 years, and in the next 3 years the stock really inched up. So the 5-year time horizon, what Savart might have recommended, or a long term, until we give you an exit recommendation, please remain invested in this stock. But client, due to the paucity of their own time, exited that particular stock after 2 years, and they felt, oh, the stock has not moved, the business has not performed. So this problem here is neither was the client wrong nor was our advice wrong. It's just the misalignment of expectations. The client's goal was 2 years away. So even if we had given a right recommendation, it doesn't matter to the client because they didn't end up making money. So Synapse is responsible for ensuring that the advice we give to each client reflects their requirements and their risk appetite and goals. So understanding the risk profile, tracking the portfolio once quant and iris recommend it, rebalancing of the portfolio. Rebalancing is another jargon for exit and purchase of new securities in your portfolio. Realignment is another word for rebalancing. Exit and trade management in the PMS program. This is all carried out by the Synapse system. So now, if I summarize what I spoke in the last minute, between quant, iris and Synapse, we have automated the entire research desk or the advisory desk of a traditional asset management company. And that is an entire revolution in itself. It transforms the way research is done. Not just because it's fancy to talk about automation, but we'll also look at some numbers, what makes it interesting. So look, if we kind of have a look at this funnel, from trillions of data points, we look at, after conducting trillions of computations, millions of data points, 100 million data points to be precise, are actually captured and analyzed by APART in real time. Out of that, 42,000 securities, which means stock mutual funds, are covered by our system in India, US and Canada. And from that, 4 asset classes, of course what I just mentioned, and 3 investment destinations in India, US and Canada, and a single portfolio for, which is built uniquely for you. So from trillion, we get to just one portfolio that is built for you. And in our advisory operations, that was one of our USPs, where if 2 clients log on to the mobile application of Savart at the same time, subscribe with us and log in their requirements, their 2 portfolios would be different. Because you are unique, your portfolio needs to resemble that. Even if it's not entirely unique immediately, within a span of 3 to 6 months, the portfolios ensure that it completely aligns with your entire risk profile, goals, and is fully unique to your requirements. This is again not pertaining to the Ad Astra Fund. As a disclaimer, these are the actual returns that APART has generated for the investment advisory arm of Savart. So when I said we started in September 2019, in these last 4 years, maybe 4 years is really not the best kind of a time span to make a decision saying the system works or doesn't. But what we can definitely say with a lot of confidence is that in the last 4 years, we have seen the most extremes of that market can throw up. We saw a black swan event in terms of COVID and the crash that ensued after it. And we also saw one of the most terrific recoveries that the market ever made in the entire history of the Indian stock market. We also saw sideways market. We saw a market where all securities were overpriced, overvalued, and then a correction ensued. So this 4 years reflected an enormous amount of volatility. So the apart has been able to create outperformance or alpha that we call over the benchmark. Assume we take the benchmark as Nifty 50, which is the Indian benchmark or the Indian index as well, right? So we have close to doubled the market performance, and that translates to a close to 90% outperformance over the market consistently. And what's more interesting in this entire chart is that we are comparing Savart's portfolio, which is a blended portfolio of equity and debt, which means not just stock, there are liquid funds, there are other mutual funds, there are bonds, there is gold, and there is a lot of cash position. With that blended portfolio, we compared it to an all equity benchmark, which only has stocks, and it's the most aggressive, is relatively aggressive compared to the Savart portfolio, and still we have been able to create that remarkable outperformance. And this is what gives us the confidence to get going with our Ad Astra Fund, and this is the reason a lot of clients have also shown faith in the new service that we are beginning. Why apart? So we have talked about some statistics, we have seen the performance, and we have spoken about how we have been able to automate the entire research advisory operations. But why are we even doing it? What are the benefits, right? So just let's get to that. Again, that is a small word play, just in case you guys don't miss, it's a class apart. So we are playing with the word here. So I know this is lame, but it took a lot of time to come with that idea. So first is in terms of the archaic manual research process. Now in a traditional asset management company, the research analyst does the initial research. They take their reports to a team lead or the senior research analyst, who then goes to the fund manager, presents their investment, who then goes on to the chief investment officer, who then talks with their board or the investment committee, and then one investment is made. Now this entire process takes anywhere from a few weeks to a few months in a few companies basically. Now at a time when the markets have become so dynamic, people are talking about high frequency trading and millisecond based trades. If this is the pace of how research works, if it takes months to make an investment decisions, your investment opportunities are already lost. So by the time your fund manager looks at a portfolio or a stock and decides that this should be in the portfolio, that stock might have already moved and the opportunity might have already been lost. So that opportunity loss, which is persistent in the market in the traditional funds, that is what is non-existent with apart. It takes a few milliseconds for apart to look at the entire Indian stock market and give you the right investments to make. Only a few milliseconds. That is the kind of revolution that apart is able to bring in. Next, no fear of inactivity. A lot of people who are already invested in PMS funds know about this problem. When a portfolio manager or a fund manager doesn't want to make any investment, say they are invested in a particular portfolio of 20 stock and everything is going okay and it's a long-term investment fund, there is no need to do or conduct any activity. But the problem is in the industry, if you don't conduct any activity, people think, why should I pay you? Why you should get fees when you are maintaining the same portfolio across years? So people, there is an inherent bias within the entire research and fund management industry to create some fake activity basically. So they sell some stock, buy something, though there is no need to do that. So Paul Samuelson, right, told investing is like watching paint dry or grass grow. Means it is very slow and it needs a lot of patience. You don't need to do any activity. You just need to nurture it from time to time, keep a look on it and forget about it. Same thing, we follow the same kind of attitude towards real estate, where if you buy a plot, do you check its price every day? No. If you buy a house, do you check its price every day? Absolutely not. Then why this discrimination towards stock? right? Which has the ability to create even more wealth for you. So that is the attitude we want investors to bring in. So Apart does not understand your and my emotions. It doesn't care if people think that, oh, I'm not doing any activity, so let me show something. It doesn't need to show anything to anybody. It just needs to perform and invest in the right opportunities, and that is what it does. And believe me or not, that creates a lot of change in the returns as well. Next, in terms of evaluation and strategy flexibility, a fund manager or a particular fund house is generally known for a certain investment strategy, saying we are long-term investors, we are value investors, we are growth investors, or no, we invest only into dividend stock. There is an entire marketing and a narrative created around the investment strategy that one is maintaining. This leads to cycles of outperformance and underperformance for every fund manager and fund. Why does this happen? Because there is a rigidity that I will not change my strategy, I will stick to what I believe in is right. So this is the typical traditional human bias of not being adaptive to change. So what we believe is that, of course, there are certain tenets and fundamental things which do not change in our philosophy. For example, don't invest in unethical businesses, right? So we gave you an example in the brochure of Nicholas Copernicus, of how his heliocentric theory may have upset the establishment at that point of time, but he stuck to what is right, science and rationality. That's what we want to stick to. So this evolution, adaptation of new information, insights, and quickly changing the investment strategy, this is what Apart can achieve in the real time. Next, no gimmicks, no marketing gimmicks in terms of target price, stop loss, forecasts. Absolutely neither me nor my team nor even Apart has any idea what the stock market or the index is going to do tomorrow, day after, next week, next month, next quarter, next year. We have no idea. Now you must be wondering, if you have no idea, why are you charging us the money? Because all we know that in the long term we are going to create really good amount of wealth if you invest in the right businesses. That's all we know, and that's all we stick to. Now, how very creatively and very intelligently other industry players are able to create target prices out of thin air and DCF projections, cash flows, where all you need to create as an Excel sheet, put in a certain number of assumptions, and create $1 billion companies out of an idea and an idea out of $1 billion company. You could do it either way around. It's all bias, projections, and assumptions. So we don't get into all of that. So we had a lot of pressure when we started the advisory business as well. If you don't give the target price, how do we do? All we say, the answer to that was, remain invested until the business is doing well. If there is a fundamental change or a change in the thesis of the business, then we will give you an exit call at that point of time. So whether it is 100% growth, 200, 1000%, how does it matter if the business still has the growth potential? So that is what Apart doesn't involve in. We don't get into all of that stuff. Next is rational, not emotional investing. I use a particular brand of toothpaste, so I will also invest into that company. That's not a bad idea. It may be a really good business and a really good product, but a really good product or a good brand doesn't always translate to a great investment, because investment needs to be at the right price, at the right kind of scale, and into the right kind of a business. So we don't invest emotionally, we invest rationally. Last, in terms of no bias, right? So whether it's the inactivity bias that I was talking about, an anchor bias, a sampling bias, or a personal bias in terms of, I like this brand, I like that sector, I believe in that stock, I believe in this sector, I believe in that particular promoter, I think that fund house is very good, I think this conglomerate or this business group is very nice, or I know that they are getting some orders, so I will do. No. All investment decisions are made based on rationality and insights that Apart gathers. There is no scope or room for bias to enter into this system. So this, in terms of our entire investment strategy, philosophy, the minimum investment that we are looking at in terms of the Ad Astra Fund, and a lot of other details that we have discussed. So I thank you for your time in terms of first for showing up, I keep saying this, and also for sitting through this entire long presentation. I will hand this over to Karthik and Surut and Kranti, who will give you more details about the entire fund. Thank you so much.
Thank you, Sankash. Thank you once again for your insights and vision. There was a small glitch because of the internet for all the people who are watching live, if there is any of our customers who are watching live. Now it is back up, just saying, so that you can just communicate to the customers. So great. After this amazing introduction about Ad Astra, why we call it as Ad Astra, about the fund, etc. Now let's get back to the buzzword, AI. So what is it all about? How are we using it? And how AI is helping us in creating wonderful portfolios? And what's the backbone of Savart is all about AI. So to speak about that, I have Mr. Suruth Idara, who is our head of AI and engineering. Suruth, can you please come on stage? He'll throw us some light about AI and take us through the journey. Thank you.
Hello everyone. Shall we start? Awesome. It's really good to see you all here. This is more than what we anticipated. It's really nice you took out your time on a Saturday evening. You all have heard like AI probably 100 times today and in the brochures as well. I'll try to shed light on like why do we even need AI and how we use it exactly, right? Should we start? Perfect. So I'm sure most of you have heard about AI or used ChatGPT in the recent times. There's like too much hype about AI and what it can do, its capabilities. I'm sure most of you all have used it firsthand and seen it as well. But you've already been using AI for already, I think, about 10 years, about a decade already. Your Face ID in the camera, your photos getting, classified properly into folders. There's always been, powerful AI systems working in the background, correct? So we'll now see, why is AI even needed in investment research, right? Like what makes it useful over here? So going to the next one. Sure. So I'll try to explain this to an example, right? I think Sankash has taken the remote with him. Just a second. Yeah, all fine now. Perfect. So I'll try to, let's start with an example, how to understand like what exactly the problem is. So imagine you're an astronaut and your mission currently is you have a rocket. You need to, explore the entire universe and try to find if there is life on other planets. But there are about billions of galaxies in the universe and there are trillions of planets, right? So it's impossible for you to like manually go through each one of them, and the problem is you're always short of fuel. Similarly, in manual research, it's basically that there is about if you compare galaxies with companies, a company is like a galaxy. There are about 5,000 companies just listed in India, actually more than 5,000, and there are about Shakir, presentation. Correct, yeah. So it's basically how the problem with manual research is as well. So there is about 5,000 companies that you have to go through. And in each company, just like each galaxy has like trillions of planets, you have the annual reports, quarterly reports, thousands of news articles, and tens of all these company filings, right? And for a person to actually go through this, it will take about weeks or months. It used to actually take us weeks or months to actually, do it manually. But then if it takes like this much amount of time for to research a particular company, to research all the available listed stocks is just impossible. So by the time you've actually gone through all this data, and luckily if you remember all that by the time you're finished, the opportunity has already left our place, right? So that's the reason that we want to solve these problems with AI. One, we want to first decrease the time of research from a matter of weeks and months to minutes or hours. And then the side effect of increasing the speed of research is that the coverage increases. Now we can actually go through hundreds of companies, actually thousands of companies, and multiple geographies in just matter of minutes. Correct. So one problem that we haven't talked about till now is the human bias. It's always unavoidable. So two of the important biases that the investment advisors actually suffer with is the confirmation bias and the hindsight bias. We are always in a race to compare this current situation with the past. Like for example, take the COVID situation, right? When the market actually went down by 40% in a very short span of time, some of the experienced investors who have seen the 2008 crisis as well, they were very apprehensive about the situation. They were like, we are again in for another doom. But what has happened is exactly the reverse of that. So how we humans compare different situations is always very considers only very little details. There is always hundreds of other factors that affect the result of a situation that we are not aware of, and it's impossible for us to comprehend just through the power of our brain. So these are the three problems that we want to cover by using AI for our research. Now, how we actually do it? First, I think Sankash has explained this in detail already, so I'll not go into it. So we have three components. The first component that deals with the entire numerical data that we can get over the companies. For the past 25 years, for each company, we have over 500 of these quantitative parameters that takes it to about 100 plus millions of them. And the next one being the qualitative side, the iris, where we where a ChatGPT-like model, we've been working on these models already from 2019, where these models actually go through the textual information, like what is there in the annual report, what is there in the quarterly report, and try to summarize and get insights from over that. And the third part of it being Synapse. Synapse is what understands the client needs. Like Sankash said, everyone has unique needs, and that is something we have to capture before we advise them some particular portfolio. Correct. So the results of that is what would have taken a human for one particular company a week or a couple of months, that we were able to achieve on all the companies in the listed domain in about a minute. We are able to get insights on a particular company. Like let's say the annual report is out now. In next 5 minutes, we'll have the required insights for this company. Should we be investing in this? Should we be get out of that? And with added speed, what we could do is increase the coverage. One of the most important problems of a fund is that as they scale, it becomes really hard for them to find the investment opportunities. Like you have billions of dollars, but there's a lot of places for you left to invest. Like I said, you need to go back and study like hundreds of reports now and go through thousands of numbers. But that's not a problem for us, because whatever the scale, we can be really agile because of the AI systems. So if I have, let's say, we have, let's say, saturated the Indian market, no problem. We will be, right away adding the required research on the USA, Japan, and Brazil, which we are again, going to add in the coming few months. And one particular interesting thing with this is this reduces the human bias. So I wouldn't say, that takes away the entire human bias, because end of the day, what the AI system is learning from is the inputs from the humans. The annual report is actually written by a human. It's not written by an AI. So it still is subjective. But this reduces the decision-making bias that involves a human while he actually reads the report. Correct. So that's about it. I'm sure like you'll have a lot of other questions right after Kranti is done. We'll have a long Q&A session. So yeah, thanks for that.
Thank you, Saurabh. Thank you once again. So, launch is done. About AI is done. What's next? About what the PMS process is all about the pricing, about investment structure, etc. To present about all these things, we have our Chief Growth Officer, Mr. Kranti Chaitanya. Help me invite Kranti on stage and throw some light on the PMS process.
Hello everyone. So I'll take a few minutes to start my PPT. So I'll tell. Is it okay? Yeah, I'll use the space also and the mic as well. So Sankar and Surit, my colleagues, have given a great in-depth into how and how we want to do the fund and how we want to grow and all. I'll come little down to earth and I'll speak about the operational work. I understand there are some real experts here who have been doing investing in PMS, but for the interest of larger audience who might be fresher or who might be thinking how and what is the way this execution happens. So I'll go in depth in next 10-15 minutes to give light on what are the operational works, how does this process work, what do you need to do if you are interested to open a PMS account with us, and how I will also address into the queries of how your money is safe with us or if you have. So PMS is very in a way very similar to the operational work is very similar to a mutual fund, but the main difference between a mutual fund and a PMS is mutual fund is giving you an expert investment execution. PMS gives you an expert fund manager access, because in a mutual fund you will never be able to tell your fund manager how you want to take care of your money, and it starts with small. But in a PMS you will have access to the fund manager directly, and you can, if required, give your own preferences in the strategies and ask them and tell them how you want to take care of your money. So if even in PMS, if you don't want to invest in particular stocks based on your personal preferences, that is always available. So, right. So there are mainly three important aspects that we take care of in PMS, or there are three important partners for us. One is a custodian, and there are multiple brokers through whom we access, and then all of you, the clients. So there is a circular module on who has what duties on this. So I'll just wait for 30 seconds, because if I show it will be much better than I continuously monologically keep speaking about it. Yeah, I'll just wait for a second because that needs to be shown. If I can know how many of you actually invested or right now invested in PMSs? Any hands up who have known completely? Thank you, one. And anyone who is aware of the entire PMS process, though you have not chosen to invest, but are you aware of the PMS processes? Okay, thank you. About 10 people know the process, how the PMS works, and I think the larger audience needs more detailed explanation. Yeah. Okay. So we are up and running, like whatever I wanted to say with this first slide. Is it okay to start or? Okay. So just for the information, we are tied up with a few of the best partners in the industry, in the financial industry. Like I said, there are two important aspects of us. One is the custodian, whom you see here. For us is Orbis International, which almost holds about 41% of market share in India. Most of you people might not have heard about Orbis International because they only deal with custodian services. They don't do any of the other banking channels and so. So it is a B2B company. It is not more into the B2B vertical, B2C vertical. So that's why many people might not have heard, but they are the market leaders in India. Second, we are allowed to have up to 5 brokers as per SEBI, and 4 of these brokers, as you see, are the big wigs of India: Philip Capital, Nuvama, MK, and Axis Securities. We have chosen them after thoroughly looking after various aspects in terms of, because as you know, Nuvama, which is an Edelweiss earlier, and Philip Capital, both are very experts in the international market. So we have tied up with them so that we can help our NRI customers with ease, whoever wants to invest even from outside India as well. So this is the process flow. There are 4 steps, and if any of you are interested after this presentation, after the QA, you have been given a few interest forms that are part of your brochure and all, if you can fill. But I'll explain how much is the time lag that it is going to take. Even if you have decided today, what is the time process and what are the various steps to get and invest into PMS fund. So the first is you will have to sign an agreement with Savart, then you will have to sign an agreement with the custodian as well, and we will have the KYC process done, which typically takes about 2 to 3 weeks, because though as Savart we wanted to go digitally everyone, not everyone is at the same space as us, so this all has to be right now done in physical mode only. So there will be a lot of to's and fro's in terms of sending you the forms, sending us back, and then people sending it back to the Orbis. So there will be to's and fro's. Forms is required, so 2 to 3 weeks it will take. Next is this Demat account opening. So many might have a question of whether you can invest with your own Demat account. No, you can't invest. For PMS, a fresh Demat account will be opened, which will be opened by Orbis. The way it works out is it will take just 2-3 days, but the process is that this PMS is managed like a pool fund, very similar to mutual fund. So all your money will be, while handled by the fund manager, you will have a view access. So you get everyday reports, weekly reports, monthly reports on how your NAV calculation has been done and what is the status of your fund, how much is in liquid position, how much is in actually invested in stocks, which stocks. All this comes with the new PMS. So the third one is transfer of funds. Now you can either transfer funds, there are 2 options here. You can invest 50 lakhs as a fund, as a full one, or partial fund and partial securities. If you already have securities, for example, if you are already investing in stock market, with stock market doesn't mean only stocks, you can even transfer your mutual funds as well. So if you have stocks and mutual funds worth of 25 lakhs, you can transfer that, the remaining can be transferred as a fund. Any proportion is possible. All 50 lakhs from your existing investment can also be done. That is based on which fund, which broker you have. So it is all on the client dependent. The last is the fund manager will start, once the fund, that 50 lakhs is in the account of the PMS fund manager, then only he will be able to transact. So once that is done, Orbis will start allowing us to transact from your money. So we will always have the transaction rights while the view access will be with you. We will never have a withdrawal right. So this is what I was explaining earlier also. So Savart means our fund manager. So then once the account is open, he is going to tell the broker on what stocks to be sold and what to be bought. The broker has only execution rights. In typical, if you are a retail investor, the broking and custodian part is done by your broker. But because it's a large investment and there is a SEBI restriction that custodian has to be separate from broker. So even in any other PMS, if someone has both custodian and broker license, it is a restriction that in your own broking capacity, you can only do 20% of the transactions. So you will have to have external brokers for that. So once the broker executes, he will inform it to the custodian, and the custodian's only sole duty, just like on mutual fund, he will calculate. So the reports that are being generated, he is managing from the client's angle. So every NAV, every transaction is reported to the custodian in turn reports it to SEBI. So they will send you all the reports on a daily basis, on a weekly and monthly basis as well. So the client the only duty of the client here is to sit and watch while we grow your money. So I'll delve a little deeper into the 2 plans which are part of our broker also. Our plan 2 is pretty much simple, but more important is the plan 1, where we have a fixed management fee, which is 2.5% of your fund, whatever you are investing. And then hurdle rate, please understand hurdle rate is for us, the challenging is Nifty 50 TRI. So in the market, if you see many of our competitors have a hurdle rate like 8%, 10% and 12%. Those are fixed hurdle rates. But we are going aggressively with the best in the class, which is Nifty 50. So as India grows and Nifty grows, we are trying to challenge ourselves to grow more than Nifty. So if Nifty gives you 20, then we are only here to ensure that or try and get you more than that. So then our performance fee. So hurdle rate here is that I'll go into a small example also, but before that I want to tell, apart from management fee, we have a profit sharing fee. That is where our interest lies. And for us, hurdle rate is Nifty 50. So what happens is, if the Savart, whatever Sankarsh has been showing you the performances, from the same example, if Nifty has grown by about 13.5 or 14%, and we have given you 25% return, we will charge profit sharing only on the upward 25 minus 13, which becomes 12%. Only on that 12% there will be profit sharing. So if Nifty has done better than us, there is no profit sharing. So just for a deeper, there is one more jargon the typical industry uses is high watermarking. I will explain you with this because during our interaction in the early stages or a beta launch, many of our customers asked what is going to happen if you underperform, what is the profit sharing, or if Nifty has fallen and you have fallen, what is it that, how are you going to charge the profit sharing? So just to address that, I will show you a quick example. So just think this is a hurdle rate. So the reason why I highlighted that is, for example, you have invested about 1 crore. So starting, and in the next 4 years, these are the returns of Nifty. I'm just quoting for example, year 1 it gave 15%, year 2 it has gone down by minus 3%, year 3 it has given 18, and year 4 it has 16%. And at the same time, if we have given this kind of a returns, how the calculation will work? Year 1 when Nifty has given 15%, we have given 40%. Year 2 when Nifty has fallen by 3%, we have fallen by 5%. Year 3, 18% Nifty and 30% for us. Year 4, 16% and 40%. Just with these numbers, how the calculation will work is, you see this highlighted position. So while in the first year, we have given 40% return, which becomes 40 lakhs out of your 1 crore. And after few fees, let's say there is a fee in terms of the transaction, the brokerages and everything else. Just for quoting, we have taken a random number and it becomes, your fund becomes before our performance fee is 1 crore 36 lakhs. So that is around 36.8% return we have given. So the returns realized after Nifty 50 is 21 because 15 is the estimation that we took. So on that 21%, I charge you about 30%, which becomes 6.4%. Now, this is the important question. Now, what happens is, in the year 2, 1 crore 36 lakhs is my high water marking, which has been my pre-performance fee number here in the year 1. So, in the year 2, when Nifty has fallen and we have fallen by 5%, you see there is no performance fee. Interesting fact is, even on the year 3, when we have given 50% returns, when Nifty is expecting 80%, you see the number is still 1 crore 36 lakhs, which is my high water mark. On that year, on high water mark figure, I have only generated about 7% more than, in fact, only 10% return, because though I have grown from 1 crore 19 lakhs to 1 crore 51 lakhs, compared to that, the high water mark is 1 crore 36 lakhs. So 1 crore 51 minus 1 crore 36, put upon, we have generated only about 10% return, more than the hurdle, 10% return. And then when you calculate it, the hurdle rate of 18%, we are actually negative on the hurdle. So we are not going to charge even in the year 3 any performance fee. So what it is basically going to say is, even when Nifty or our fund has fallen, until we go to your pre-levels, to the levels of where we have already booked the profit, or we have shared the performance fee, we will not again charge the performance fee for that. So until the fund comes, so only on year 4, again we will charge the performance fee when already the fund would have become 2 crores for you. Just few FAQs I just wanted to address. Of course, we'll have a lengthier question and answer session as well before wrap up. What are the FAQs? Can only one person invest in a PMS fund? No, you can partner up to, just like a joint account, up to 3 people, friends and family put together can also pool in 50 lakhs and invest it. Second is, do I need to get fresh 50 lakhs, or I have already answered that? Yes, the third question is, if you will be able to top up the capital on regular basis. Yes, you can always top up whenever you required, provided that the 50 lakhs is always there. And how the calculation there works is what we call as time weighted rate of return, TWRR. And I can go into deep of that whenever you have time, but basically whenever the capital inflow happens from that day, time weighted rate of return will be calculated. It's pretty much same process in mutual funds as well. And can we withdraw a certain amount of the account? Yes, you can withdraw a certain account whenever you want. The same settlement cycle of T+2 days or T+1 day will work, but you will have to ensure that after you take out that money, there is still 50 lakhs of corpus in that. If not, the entire has to be, it will become a withdrawal. It's completely exit of the PMS. And one more question is, because we are keeping it Nifty 50 as a hurdle rate, many have asked, are you going to invest only in Nifty 50? No, Nifty 50 is our hurdle rate, but we will look at various asset class in investing based on our apart system. Thank you very much.
Thank you, Kranti. Thank you very much. So, yeah, even the operations and basic pricing plans, everything is done. Let's move forward to question and answers right now. So before we move forward to that, there are two options. One, you can just raise a hand. One of our representative will come with the mic and you can ask the question to the panel. I'm going to invite the panel over here. Second thing is, you have received the books and pen. You can just write down your question and pass it on to any of our representatives. They'll just pass on that question to us and we'll just ask the panel about that question. Both the things are okay with it. So without any further ado, I would request Sankarsh, Kranti, and Surut to please come on dais for Q&A session. Let's just have Sankarsh, Kranti, and Surut on stage, please. So we have already received a couple of questions. So first I'll be asking all those questions and then slowly we'll get to Q&A. Whoever wants to ask the question can just either raise your hand so that we can pass the mic to you, or we can, you can just make a note of that question and pass it on to one of our team members. They'll ask the question. So team, I have a couple of questions which I have already received from. The first question, how is portfolio management service different from advisory service? Sankarsh, maybe you can answer.
So I think we covered this well in the presentation. So the primary difference is in PMS, we'll be able to execute, manage your capital. Advisory, we can only advise. The best analogy is advisory is like a doctor's service, right? Where he can advise, guide, he or she can advise and guide. But PMS is more like a hospital where you can also, I know bad, it's a maybe a negative analogy to give, but easy to explain. So you get the problem as well as the solution with the PMS. That's a difference.
Fantastic. Thank you very much. So the next question is, I guess, Surut, maybe you can answer this. What advantages does an automated fund offer compared to human managed funds? Why is AI important here?
So I believe there are two aspects to this, right? One is the research aspect that we have covered in depth. Instead of spending weeks and months on a research of a particular company, you can just extrapolate that to all the companies in a matter of just a few minutes. And on the operation side, like we said, time is always of the essence. So like Sankarsh was saying, there's always an execution lag in the advisory business. So we tell you should be investing in this particular stock, and you might not be able to see that message at that particular point of time. And by the time you have invested, the price must have already gone up, correct? So with an automated fund, with us having the entire control, we can just do the transaction as well in a matter of seconds.
The next question, I guess, Kranti, maybe you can take it. First part of the question is anyhow answered. What has been the CAGR achieved by Savart in its advisory services? And the second part of the question is, and how does this translate to PMS? How do we extrapolate?
So, like we have been explaining in this, Sankarsh has explained that execution is the main difference between PMS and advisory. So, and our CAGR that has been explained by Sankarsh also is the blended and mixed portfolio, mixed averaged out for across customers and including stocks, mutual funds, bonds, and etc. Like we've already said, PMS will be more equity centric. So we expect, and the transactions will be without any time lapse. So we expect to create more alpha for our customers along with the PMS.
Thank you. Thank you very much. Next question again is, what sets Savart's PMS apart when compared to other funds in terms of automation and decision making? Maybe Sankash, you can take.
So I think it's in the name apart. Quantitative data is the general bread and butter of most of the automated funds, if they do or are really automated in the first place. And second is the qualitative data that we are able to analyze and do very similar to a research analyst. I think that makes it a real deal basically, because you can't or you don't want to make an investment purely based on numerical data. There's a lot more to a business than numbers.
Perfect. Perfect. Next question, again, maybe Kranti, you can take it. Why does Savart have a profit sharing pricing plan?
Okay, like I said, there are two plans, but profit sharing is where when we also have the skin in the game. I will earn more. At the end of the day, of course, we have vision to do more retail, go into tier 2 cities, educate rural. But this is also, I am a commercial guy. This is also a business case I'll have to make. We'll have to make money to our customers, and by that we will want to earn more. So profit sharing comes into play. That's why we have gone very aggressively
For the entire research that I've been reiterating all the while. So I think the minimum investment limit, I mean the threshold, the beginning amount is 50 lakhs. That's prescribed by SEBI, the regulator, not by us. And any number upwards of 50 lakhs is of course allowed into the fund.
Great. This again goes to Kranti, purely with respect to the business. Are there any discounts available?
Yes, of course, we wanted to announce a special discount. Whoever is giving us commitment or fill that forms today, we will give a 25,000 rupees discount on the fee, that on the management fee for whatever you pay. So based on your investment amount commitment, the management fee will be calculated on that. There is a flat 25,000 rupees discount whoever gives us. We're not expecting that it will be closed today, but you give us the expression of interest today, so we can take that.
That expression of interest, there are few onboarding forms which are already part of the welcome kit that we have given to you. You can just fill in that form, and you can share the document with our team who are present over here. Or if you need any help with respect to filling that form or about this onboarding process, you can reach out to any of our representatives. They'll take they'll help you out with the entire process. Yeah, there are a couple of questions ready. So there's a hand raised. Yes, please.
Yes, Akash. As you said, irrespective of market cap, you will invest. Recently, SEBI below 500 crores market cap, stringent plus or minus 2% only. Periodic call options, how you will handle?
Got it. So I do not know the exact circular that you're referring to, but I've read something similar. Of course, when we say there are market cap agnostic, there will be certain limits. One, practical limits in terms of the liquidity, like I gave an example. Now we want to say invest into a 150 crore market cap company, but there may not be enough shares in the free float available in the market, so we may not be able to. Second is regulation, of course. So as and when there are any stipulations, right? We also expect that sometime there could be a further regulation in the PMS market on if you are multi-cap, you need to maintain certain allocations in certain range or slab of market cap in each of the range basically. So it's very difficult to kind of immediately say how that will pan out, but we have to comply and adhere to the norms from time to time. So whatever are the regulatory challenges or the obstacles or the limitations, and practical limitations we will avoid by. And second, in terms of, as far as I know, and the compliance team would be better capable of kind of handling this. So whatever, how we also program the apart system is, it is kept up to date on what are the norms and requirements. So if there is a particular change from time to time in market cap range on a particular requirement that SEBI has, the system is one of the fastest to kind of grasp and get that done. In fact, it is much faster again than a manual process where the compliance is always say yeah, there is a lag between the compliance being ordered and the compliance actually being met. So even there we have a slight edge, I would say.
I guess I've seen a hand raise at the corner as well. We have one more question there. Yeah.
So I already have some investments actually, right? So if I move it to PMS, do I have to worry about the taxation parts here?
Got it. So the one beautiful aspect of this entire process is you don't actually need to sell your investment to move it to the PMS of Savart. Basically, you can transfer the portfolio directly within the reach of Savart. So without any sale or exit, you can actually transfer your portfolio, which means there's no taxation impact immediately on the portfolio at all.
That's a good thing to know.
Yeah, absolutely. Thanks.
Great. Hemant, maybe you can just take it that side. I've seen a couple of hand raises.
That's the fund, any, invite any income tax and other process.
Sure. So whatever taxation rules apply are as per the general LTCG, STCG, the short-term capital gain, long-term capital gain, whatever are the applicable taxes are same. It's not very different with a PMS. Now the only difference in a PMS and a mutual fund in terms of taxation is that in mutual fund, the tax kicks in only when you redeem your units in the particular mutual fund, means exit. In PMS, what happens is whenever a stock is sold or exit is done at a stock level, not at a portfolio level, even then it kind of attracts a tax. But the nuances or the macro level impact on your portfolio will almost remain the same. There's no additional or neither less tax, right? LTCG, STCG, they are the standard across the markets. So we don't need to be specifically, there's no worry about extra taxation or any benefit also is not there in that way of investing in a PMS from a taxation angle.
Yeah, there is one question over there and the next one over here as well. Yeah, please.
Take
No, there is someone asking the question.
Yeah, okay.
Yeah, please, sir. You can ask.
Congratulations, team, for the Astra Fund launch.
Thank you.
One question is, if there are 2 or 3 people coming together and investing 50 lakhs,
Yes.
then how does it work? Do you need to register it as a separate firm, or and what are the tasks implications for it?
Got it. So like Kranti mentioned, a joint account is definitely possible. So it depends on whether you're doing it with friends or family, right? So whichever structure can be accommodated. So even if you have a firm or you want to do it, or you want to remain as 3 individuals and want to open a joint account, as per the compliance, whatever is allowed, we will get that accommodated for you. So you need not worry that even if the amounts are different, for example, if 3 of you are not investing equal amounts, I think even that can be accommodated. And Kranti will add a few more points.
So it's just like your banking joint account. Out of the 3 people, one has to be given the main authority, who can, because the transaction can never happen. When exit happens, it is all 3 have the equal rights. So if out of 3 people have invested 50 lakhs for an example, and it became 1 crore, so all of have invested. So one partner who wants to exit can exit, and other 2 can still continue because the corpus still remains 50 lakhs.
Great. Next question, please.
So in the presentation, I heard that you said you don't have fund managers or in your company, right? So if for some reason AI makes some mistakes or some reason software bugs or anything could happen, how you are going to validate those stocks?
Got it. So first, to avoid, I mean, your point is definitely interesting. I'll answer that as well. So to avoid, say, any issues even from our regulator SEBI, we do have a fund manager who is Aditya Ranade. But the thing is, the decision making is very much automated because as per compliance also, we need to have a fund manager and entire team. So the team is maintained technically, but they're not involved in the operations. And like Surut mentioned regarding the mistakes, Definitely AI makes mistakes, right? It's not perfect. Like saying, okay, if a human invests into 10 stock, if they might lose on 4 or 5 and AI would do 10 on 10. Absolutely not. It makes its own set of mistakes. So there are already risk management rules and techniques already applied there. So the AI cannot take random decisions by itself. For example, if someday the apart decides that I'll put 100% of the portfolio into one stock, it's not allowed. There's a cap of 10% on each stock, right? Second, if there is a particular sector that the apart system likes too much, I'm giving a hypothetical example, right? It can't say I'll put 100% or 80% or even 50% of the money into one single sector. That's not allowed. There's a cap, right? So like this, sectoral, industry level cap, security level cap, asset allocation level caps, everything is preset basically. And not just preset, the system kind of learns from time to time on how to move those limits and orders as well, right? So if it's 10% to begin with, it can change from time to time depending on the market conditions. So we need not be worried about rogue decisions that apart is taking basically, right?
Great. Before moving to next question, I have few questions which I've received in the Google form.
Okay.
One again, going to growth, business point of view. If a customer refers few other clients to Savart, what would be the benefit, especially with respect to PMS?
So whereas I can take that one-on-one question, whoever is interested, definitely we'll talk. We have referral partner program, we have channel partner, like Sankar said, we are opening franchises. So we are open to discuss that on a one-to-one basis and what best suits we'll do it.
So just to add one more point, like Kranti didn't tell you the number of the fees because he has his own revenue target, so he doesn't want to ensure it cuts into his margin. But all we can say is it will be a very generous kind of a referral partnership program that we have already for advisory program, but also for PMS. It will be extremely generous and interesting for people who want to bring in more like-minded investors to us.
Fantastic. Next question again I've received. What will be the expense ratio in PMS?
So the expense ratio, okay, interesting. But so in terms of expense ratio, of course, apart from the fees that you kind of pay to Savart, there is an operational custodian charges and multiple small other charges. But SEBI has already prescribed a limit of 0.5%. Any expenditure cannot exceed more than 0.5% of the AUM basically. And Savart will try to retain it way below the maximum threshold. So it will be of course, I can't say it's a minuscule number because every rupee is important, but it will be very reasonable is what I can say.
Fantastic. I have one more question with that I've received. How do you prioritize your advisory now that you have started your PMS? If I opt for your PMS service, should I discontinue my advisory?
So if it's the same client who is investing into PMS, we cannot as per regulation give the service to two services to the same client. Either you are our advisory client or our PMS client. However, the start of the PMS business doesn't in any way mean that advisory is going to be ignored at all, because our vision was to work with clients who are investing for the first time, who are investing small amounts of money, and to create wealth for the middle class and the lower middle class part of India. So just because we start focusing on a bigger or a high net worth client segment doesn't mean we are going to ever ignore. And in fact, that's a good part about our advice and research process as well. Because we have automated the research process, like I said, it doesn't discriminate between people. Oh, you're investing 50 lakhs, so I'll give you a secret nice portfolio. Oh, you're investing only 50,000 with us, so I'll give you a bad portfolio. It doesn't know. It is naive like a innocent child like that. So that's the beauty about that entire system. And this is also what is very different from the other market players. So depending on how you say dress, or even what car you drive, or what home you have, or how much money you are investing, the kind of portfolio you will be recommended to is very different. If you do not believe us, you just try looking at one of the topmost say services in India who actually offer these things. You'll notice that the pricing, the person who comes to talk to you, as well as the entire portfolio could also be different, and your entire experience would be discriminated like that, which is absolutely not the case ever with us. So a client investing 10 rupees or 10 crores or 100 crores with us receives the same quality of advice and the same quality of care for their investment.
Great. I have one more question over here. Yeah, you can upload. So I have one more question that I've received. They are talking about there are other bigger players in the market who has hundreds of crores of AUM, and they have enough data to train their model as well. How are we going to compete with them? How are we going to be different from them?
So one, in terms of competition, I'm kind of never worried, because even when we started our investment advisory 4 years back, there was competition. They had more money, more time, more expertise, and more people than us. And still we went on to achieve the pole position in the market, right? So the same with PMS. Of course, anybody can train models, anybody can do AI, anybody can build their own research system. But our philosophy of investment and our ethics, which are infused into our technology, which is also not just cutting edge. When we say not for a marketing that we wrote that cutting edge, it is actually ahead of its time. When nobody was talking about AI in India in the asset management space, we had already deployed, used, and created wealth also. So we are not going to rest on our laurels here. We're already building the entire apart team as an entire research and development lab, basically, where they are encouraged and given freedom to create their own innovations and discoveries in the field of AI. So there will be an application and execution of those inventions that we create into the real life trades also, which ensures that we stay at the kind of the cusp of innovation and ahead of time. That's what we are trying to do every day. So we are not, apart is not a done deal. It's a continuous work in progress, basically.
That's true. Fantastic. I have one more very unique question. If you have really great investment advice, why can't you just give us a minimum assured return?
So minimum assured return is illegal and impractical also, because after all the AI research, advice, and all the things that we're talking about here, say we invested into a particular manufacturing plant, right? Where there was one electrical switchboard which was not had an issue or a malfunction, and or a wiring in their plant which nobody even looked into, and the insurance of the plant expired just 2 days back, and they were in negotiations, right? The management, and there was a short circuit and the entire factory burned down. How will apart know, right? And forget apart, how will a human fund manager know? And their operations are stuck for 6 months and their business is affected. So that is the reason risk is always there in an investment. Remember, you are putting money into a business. No business has a minimum guarantee scheme. If that is there, it's a fraud, not a business.
Fantastic. Thank you. So do we have any other questions? Yeah.
Uh, First of all, congratulations to you and your team. I would like to ask question about AI.
Yeah.
Even I work in a data science team for a world's largest pharma company. Uh, Although it is AI, it still depend on some manual data, what we upload and what we buy from vendors. So how confident are you about your system? Because someday some issue is happened and you recommended in that 2-3 days to some customer and they have invested money on it. But you identified that issue after 3 or 4 days or after a while. So there will be many more factors like this. How do you tackle these situations?
Yeah. Firstly, like you said, the data is from various sources, and since you have already worked in data science team, you might understand that uh, these issues affect you a lot. Let's say when you use probably a data set of 10,000 samples, but as you increase the data set size, they tend to follow a pattern, and a few bad samples wouldn't really affect you. To say it in a very non-technical way, like you said, we always learn from the previous mistakes when these things happen, and it's unavoidable, I would say. That's the reason we have these guardrails for investing. If there is an extreme action anywhere, the decision will just not move ahead. And if it's something we have caught next time, we will be careful to check, put in that particular data check. Right now, I believe we have about thousands of data checks that happen before even the training or the inference starts over that. So if that's not enough, like you said, we'll add a new one once we, learn this. That's it.
Great.
And this is question to Sankash. As an individual investor, I always set a benchmark of returns. For example, considering taxes, GST, if I buy gold, what is the amount of GST is coming in and what is the percentage of return I'm getting annually. So with that benchmark, I look it at the end, I am getting 5% or 6% or getting a good amount greater than a general bank FD, because if I invest in bank FD, I just sit and relax. I don't have any pressure on my mind. So do you set any such benchmarks while recommending a customer at your end?
Got it. This is a very tempting question, to say the least. So, our benchmark for return, right? Like I said, is a Nifty 50, which has a multi-decadal history of between 13 to 15% is the average return that it has given. So that's a very good indicator of what kind of money you should be looking at. But again, you will have of course, a reasonable question saying, if I can make same money as Nifty, then why should I pay Savart the fees, right? Which is for the alpha you are paying. So our internal targets are much more. In fact, the return that we showed as a track record for advisory business is not something I am satisfied with personally also. It's a very good number, but then I want to do better than that. At least another 20-25% better than the 25% CAGR, not in terms of absolute 25%. No, I'm not saying 25% plus 25. I'm saying 25% of 25, right? So that's the kind of numbers I am looking at internally. But then it's also important that we set the expectation low. That is the reason we tell people, you look at the benchmark, you'll understand what you are going to make approximately. And also another point is this return and performance, right, comes in bursts basically. It doesn't come linearly. That okay, I invested 1 year, I got 20%. I invested next year, I got another 20%. It's not like a fixed deposit. 1 year it's like minus 5%. Next year it's like plus 40. Again it's like minus 20 or like plus 120, right? So if you look at how Nifty has moved in the 20-30 years, you'll understand, or 20 years to be precise, you'll understand how volatile the market is. That is the reason we also ask people, give us certain time, give us 3 to 5 years time at least. So for your planning purposes, I would say for not just Savart, any equity investment you plan between 12 to 15% of a return. Post taxes you can say only 12, right, or 12 to 13, and after all charges and all, another 0.5% you can remove. That will be your target return. Anything you make beyond that is the alpha, that is a bonus for you, you should consider, right? But what we are definitely, we can say with confidence is, even the base benchmark you keep for equity is still better than gold and FD any day, basically. So that's what makes it a compelling investment, right?
Fantastic.
Yeah.
Thank you. I see one more hand raised over here. Yeah, yeah, please.
First of all, I would like to congratulate all Savart team. My name is Padma. I came from Vijayawada for this program only. I'm working as Assistant Executive Engineer in AP Genco. Sankarsh and his father, I know from 2021. Many times I try to meet him, but it's very happy to meet him in this program. I'm very so many questions to ask, but I would like to ask 3 questions. If we start with PMS services, we are not satisfying with this service, can we break the agreement with you?
So definitely very valid question, in fact. So both the parties, whether it's Savart or the client, always reserve the right to terminate the agreement, right? It's just like any other service where you always retain your rights of termination. So whether it is due to bad service, or you're not satisfied, or you don't align with the performance or the strategy, definitely client has. So it's the frequency or the period that you are signing, you can only decide that period as well. There are multiple plans that we have as well. So you can choose the least frequent, or say, no, not least frequent, the most frequent pricing plan, which is quarterly pricing plan, and just reevaluate from time to time. That is definitely possible.
Any charges is there?
For termination, yes. So in terms of not just for termination, for premature exit of capital, right? So if the capital is exited within 1 year of investment, there's a 3% exit load. For second year, if there's an exit, it's 2% exit load. From third year, it's 1% of exit load. From the fourth year, there's no exit load. So what we're trying to do there is try to encourage clients to invest as long as possible, which is our request also, that if you have the time, please give us, right? Other than that, just for terminating the agreement, there's no such charge basically, right?
Is there any maintenance fees for maintaining this platform?
So there is no specific maintenance fees. What is there is that small expense ratio which we spoke about, which we're trying to maintain between 0.15 to 0.2% is our goal. A little here and there it will be there, but there's nothing called a specific maintenance charge apart from the fees that we're taking.
Shall we continue that same demat account?
Yes, you can. No, okay. Yeah, the demat actually, the custodian or the broker partners that we have, you would have to transfer your existing share, or if you want to put fresh capital, it has to be into that demat account, because we are not partnered for PMS with all brokers. It's not even possible practically to do that. So you have to put it into a certain demat account that we tell you. However, from a safety angle, I can make this clear that irrespective of which demat you put into, right, the demat or the broker that we are telling you, Savart can never access your capital apart from the reason for investing. It means your money can't be taken by Savart and run away, or any such a kind of fraud chance is really, really small. Not small, it's zero, I would say.
Just want to add to that point. I was trying to explain that how the structure works is you will open a new demat account, which you will have a view access. The fund manager will have a transaction access. And the fund manager has only transaction for buy and sell, not for exit of the fund. So you can never transfer, even if the pool fund will be in Savart's name, which is Swaboda Infinity. But even though that is there in the bank, it can't be transferred from that account to another Savart account. It can always, that is the role of Orbis as a custodian. So from that account, only customer can put in money, and money can go out from that account only into customer account. And for a rule in that PMS, Savart can also never invest, just to have that, so that we don't get the rights of banking. So as a rule from SEBI, that I can't invest in my own fund.
If three investors, three partners
together
is there, if one member is not interested to continue the service,
yeah.
what about the next process?
Yes, so that will become a problem, honestly, because say in the three partners, 20 on 10 lakhs, they have invested exam. The person with 20 wants to go or 10 wants to go. What happens is your investment falls below the prescribed limit. So SEBI says at all times you have to maintain 50 lakh, right? So if one person goes, the limit falls, which is not allowed again. So all the three have to exit. So you have to ensure that like-minded people and who are patient with their capital only join you in the journey, right? So that there's a limitation.
Another last question is
Yeah,
there.
yeah, sure. Yeah.
So in this scenario, what happens is, let's say three of you invested in the same 2010. After 1 year, one of wants to exist. So it is always set the base is at the end of every year. So 50 lakhs, if you, that 50 lakhs becomes 75 lakhs, for example, and the partner who came out with 20 lakhs wants to exit. So still you have 55 lakhs, that is allowed. So after the exit, if it is falling below 50, it is not allowed, just for clarity.
Last question.
Sure.
What about profit sharing? Is it every year or once in a year?
So it's once every year at the end of the financial year, basically. That's when the performance fees is charged.
Thank you very much.
Thank you so much. Thanks for coming.
So in the interest of time, we'll be winding up the questions. There's one more question, one final question we'll take.
Yeah.
And I have one more question which I've received.
Oh.
First, we'll take the question over there, please.
I have the most fundamental question here. Like I've seen the slide that 85 to 90% of people, like, why do people lose money in the stock market?
Yes.
That is one thing.
Yes.
Yeah. Okay.
You have a follow-up question?
Yes. Yes.
Sure. I'll answer this first. If
Sure.
So in the video, it's nice that you actually grasped that, and thanks for watching it with alertness. So if you notice the entire line, it said 80% or so, or even more, of Indian FNO traders, right? The futures and options traders, which is something that Savart doesn't involve in at all. And the reason of that number is the reason why we don't do it, right? Because when we are investing, it's a science. We don't want to gamble, right? If we had trading as a service already, again, I don't want to say that trading is bad, investing is good, because the people who believe in that and do that as well. But we would, as a company, be 10 or 20 times bigger than what we were if we just introduced trading services, intraday, get rich quick. In 1 month, we'll give you return. 6 months, we'll give you return. We would have been a far bigger company. Forget 2100 crores, we would have been at 2,10,000 crores maybe. But the problem is, at the end of the day, investors or clients would not make money. Only I would make money in terms of fees, and the company would be happy, not you guys, basically. So even though financial education and long-term investing to explain to people is very complicated, they won't listen. They want quick money, which is not unreasonable. Who doesn't want quick money, right? Though it is difficult thing to do, we want to stick to that. And in stock market, most of the people lose money because they are running blind. If you close your eyes and want to drive a car, you'll of course run into an accident. Problem is not with the road, problem is not with the car, it's with you, right? When you say you, it's all of us, not just you specifically, right? So same with investment, research is mandatory, which I said in all my previous conversations as well, right? If research isn't there, you're bound to lose money. Sometimes even with research you lose money, but that's how business is, right?
One more question is that, considering human nature, what happens is basically humans are influenced by the profits. Like I have invested, for example, let's say 10 lakhs into the stock market. When the portfolio, I've seen the portfolio of 10 to 15% increase,
Yes.
then my need arises.
Correct.
This happens.
Correct.
Like how can you convince the investors or the people,
Yes.
so that they the mindset is for long term, so
Absolutely.
that, for example, let's take the, like I personally don't know,
Yes.
I've seen this example somewhere. Let's say if we invest 1 lakh or 1 lakh in 2018 Wipro,
Correct.
it was something around 8 crores right now.
Correct.
If
During
people
its
might know.
IPO, basically.
Yeah, exactly. So how can you as a investment, like Savart team,
Yes.
can do this?
Brilliant question, I would say. If you notice in the Savart investment advisory application, the mobile and web application, you will see that we do not have live prices. Live stock and mutual fund prices are not there. Initially, we didn't have the money to take the API, so that was not an option. But later we realized that this is a very, very effective place, because when you can't trade, when you can't look at the immediate status of your portfolio, the frequency of people coming into our app reduced basically, which in is good for us, also bad for us. Good, because the lesser the client looks at their portfolio, it's the better, because they won't get subconsciously tempted. Like you said, it's everybody's problem, my problem also. If I look at a 20% profit, suddenly one dream starts. This money I never had, now I can use this money. I'll not sell the capital, I'll only sell the profit. I'll make, and then you start overfitting the idea also. Well, let me make my capital safe, then I will play with the rest. That idea was never there in the start. Because profit came, the new idea came up. So we removed live prices entirely from the application. Second, it is bad for us because our own investors, our shareholders ask us, what are your daily average users, monthly average users, why your company is not growing. We are not able to answer them that we are intentionally not letting them come to our app, right? So this is a problem that's bad. But this is one step we have taken. Second, I would say you only keep our app downloaded on the phone, and you can stay logged out of it for as long as you can. Don't even log in, just keep the push notifications on. If there is something really pressing, we will only send it to you. And if you still don't respond, maybe for the PMS services, we can even call you and trouble you, right? That this is important, please listen to us. Otherwise, you can block our PMS email, you can keep your app logged out and just forget about your investment, which is again counterintuitive to what we want. We want you to stay updated. But if you can really do that and check your email and app once in a year, if you can do that, right, it will be the best thing that you could ever gift yourself, right? So that's my recommendation.
And please don't block your PMS email. All right. In the interest of time, I just have 3 more questions that I've received in the meantime. I'll ask these 3 questions and then we'll wind up. One question is Kranti, you can take. Can foreigners invest in PMS?
Yes, both FPI route is available. If you are an NRI and still have Indian passport and all, you can, when you are here in India, we can open. If you are a foreign citizen also, you can open it through the FPI route. That's why I said we are partnered with Philip Capital and Nuvama, because they're one of the experts in serving the international clients.
Fantastic. Surut, the one question for you.
Yeah.
Someone says you mentioned about data sets. Banks has bigger data sets when compared to Savart. So technically their AI can perform better. That can be trained better. What do you say about it?
For sure, theoretically, that's definitely possible. I mean, one golden rule about AI is if you have more data, you're the king, right? And banks definitely do have that. But the question to ask is, they have always had that data. Like, so what's stopping them from, doing that particular thing? And not just banks, right? Like, if you even compare with other AI companies, like let's say take example of OpenAI, which has released ChatGPT. Like, they have invested probably 200 to 300 million in just training one particular model, and which we can never do, to be honest. The thing is, we're not trying to, create the best AI system that can do everything, or we are not trying to understand every aspect of the client. What we are trying to do is create a specialized system that can understand our research philosophy, that can see, the see through the lens, our investment lens of each company, right? That is what we're trying to do here. The X factor is not just the AI, but our approach. So even without AI, the investment approach would, remain very similar. Here, what we're trying to do is we're making it faster and making it more reliable by eliminating the human bias.
Fantastic. I have one final question. What if, unfortunately, our 50 lakh comes down from the minimum level? Again, we have to invest the margin amount, is the question.
So if it is because of the trading exit, market fluctuation, if it comes down, no, you need not add anything. Your corpus is calculated. But because if you are exiting or taking out some money out of it and it is coming down, yes, you will have to immediately add it.
Fantastic. Thank you. Thank you very much. Let's give a great round of applause for our panel. Thank you, Surat. Thank you, Santosh. Thank you, Kranti. You can just take your seats.
Thank you so much, everybody, for joining in. Thank you.
Thank you, guys. So we'll be winding up now. So that's about PMS. That's about Savart's PMS. That's about Ad Astra. Please don't worry. If you have any further questions, you can just pass on the questions to any of our representative. Our team will get in touch with you. They'll answer each and every question of yours. And again, there is one more disclaimer that I've received from the friend desk, that a few of the customers have not taken the goodie bag, the starter kit. They can just reach out at the registration deck, and you can take your goodie bags and the starter kit. That's one more thing. That's it. Thank you very much. Thank you for joining. So PMS is our commitment towards your financial success. That's all about Savart. Thank you very much for joining. Let's just have good food, have some drinks, and socialize. Thank you very much, guys. Also, about the interest form, the onboarding form, I just, I'm just kind of reminding it to you. You have an onboarding form, an interest form in your starter kit. You can fill in that.